This podcast illustrates forward processing where you have been given a question that involves you to calculate the gross profit and also the net profit. You have been given some information with regards to closing entries of journals that the client did previously. Now what you're going to have to do here is have 4 steps. The first step here is to adjust for the balance day adjustments. So those 2 additional informations here, you're going to have to work out whether they are a prepaid expense, an accrued revenue, or an unearned revenue. Then you can manually make the adjustments in the journal to reflect the balance day adjustments. From there, you're going to have to recreate and calculate the gross profit. So I've got an extract here on how to actually complete and calculate gross profit and also net profit as well. So the first thing, as I said here, is you're going to have to determine what type of balance day adjustment here is. The first thing here is you've got wages. Now, as we know, wages is an expense, so therefore you will have to determine whether this journal will be an accrued expense or a prepaid expense. The key word here being owing, so therefore that gives it away that it's an accrued expense. So what we're going to have to do here is to add an additional $300 to this $25,500. Okay, so we're just going to put an equal sign in front of that, and we're going to add $300. Now, the question doesn't require you to redo the journals. You can if you want, but I'm just going to recalculate all of these here. Now the other thing which you're seeing here is I'm not really caring about the accrued expense, because that is an account that will appear in the statement of financial position and does not affect the calculating of the gross profit or the net profit. The next one here is we've got sales received in advance but not earned. So we've got sales here, which is obviously a revenue item. So we're going to have to determine whether this is an accrued revenue or an unearned revenue. And the keywords here, received in advance but not earned. So that gives it away that is an unearned revenue. And as we know, the journal for an unearned revenue is to debit sales and credit unearned revenue, because unearned revenue will be a liability. So in a sense, we are now taking off $500 from this $300,900. Okay, so now we've actually calculated and taken into account these 2 journals. What we might also do is to adjust these 2 amounts here to reflect our adjustments as well. So I'm just going to quickly add these amounts up. Now the reason I'm doing this, you don't really have to do it, but it's a nice checking mechanism for when you're actually calculating your gross profit and your net profit. Okay, so next is step number 3 is to calculate the gross profit. So you're going to have to know how to do this yourself. You will not be given this template for you in your assignment. So the first thing we're going to do is take our sales figure from our journal, and then we are going to take also our sales returns from our journal as well. Now, as we know, you take your sales returns away from your sales to give us your net sales figure. And then you get your cost of goods sold. And then this will then give you your gross profit figure. So we've done the first part here. So we've calculated our gross profit being $241,900. The next, we need to transfer all of our expenses across. And We add those up to get our total expenses. And our net profit will equal our 241 minus your total expenses, which is J22. So our net profit is $208,500, taking into account all the additional information which we've been given here. An easy check in which to actually do that is to get our profit and loss summary here, figure here, and minus from our total here. And that amount should equal what we've got here in our net profit. Now, the reason it didn't beforehand was because I forgot to include the other revenue here. So it's very important that you make sure you include all of your revenues and expenses in your statement of profit or loss. Okay, so taking into account what you've got here on of all of your income, less all of your expenses for your journal, and it should equal what you've got here as well for your net profit. So that's a good way to actually check that you've accounted for all of your revenues and expenses from your journal.